Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about convincing the board that the deal is the best idea. And the idea of a deal for a board comes down to three components. And the first is fiduciary duty. The second is personal interests of that board, management, and everyone involved. And third is finding the inflection point of certainly 1 and 2, but also the interests of everyone involved to make a deal the best outcome for everyone. So why is it difficult for a management team to really convince a board of a deal? Well, it starts with this idea of bad news or concerns around delivering negative news. No management team wants to go to a board and say, hey, our business is struggling. It makes the management team look bad. It can come as a surprise to the board. And what it does is it could get the management team fired or a loss of credibility or make the management team look way too emotional. So when you're in this situation of navigating a deal, think of it this way. There are 3 perspectives to navigate and 3 dimensions to navigate. And those perspectives start with company or management, your perspective on why the deal is good. Number 2 is the board. Why should the board agree to this deal? And number 3 is investors. Should investors really like this deal? And what's interesting is that any one of these perspectives can overlap each other. Investors can be board members, management can be on the board, etc. And so what you then have to do is apply 3 dimensions to these 3 perspectives. And those 3 dimensions are fiduciary duty. Am I making the right choice for everyone involved? Number 2, what is the time horizon or duration we have here? Do we have 10 years for something to turn around? Do we have 3 months? And that will dictate whether a deal makes sense or not. And number 3 is this idea of liquidity or resource needs. Do we have the resources in place to navigate this crisis or overcome or keep the business going for a long period of time? Or do we really need to do this deal to survive? And so what does it look like when you hit that intersection point of fiduciary duty, personal interests, and interests of all involved? And it typically is where time and money sort of meet each other. And the example I would give to illustrate this is if you're a management team and you go to a board member who's a VC and you say it's going to take me 5 years and $500 million or $300 million to fix this business, that VC may say, okay, this is way too much time, way too much money. This needs to be someone else's problem. And they're very quickly going to see that they've hit that intersection point to where a deal makes the most sense. So what are the key learnings here? Well, it starts with this idea of always find the inflection point of fiduciary duty, personal interest, and interest of all involved to get approval for that deal. And number 2, consider third parties when you have to deliver this negative news or navigate a crisis with your board. Use an IR person or another trusted third-party advisor to help take that pressure off of you and ensure that you get the deal outcome that the company needs to survive. Remember, when investor relations is too tough for you, it's just right for me. Thanks for watching.